What's up, guys? It's Harry Haas, and today I'm going to be doing a video on stocks every long trader should avoid. I felt this one was kind of an important one because a lot of people were asking me questions, and a lot of people have been messaging me about it. So I just thought that I'd go ahead and make a video on it. Um, First of all, I'm not a licensed financial advisor, so even if this seems like investment advice, it's not. So without further ado, let's kind of get into the video. So yeah, these are types of questions that I was getting this week. I didn't include all of them. I just thought that I'd write it down in a PowerPoint. Hey Harry, how do you take a stock off your screen? I feel like I've been missing opportunities. How do you tell if a stock is broken or if it has some potential? How do you find what stocks to avoid and what stocks are the best in the morning? And that was one that I've been getting frequently. And I was a little bit surprised because in main chat, we are always kind of talking about, okay, this stock is broken down now, it's under death line. This is not a stock that I'm looking to long. I always try to kind of point that out, and I think Bao does a pretty good job, and Alex will do the same thing as well. Tosh, all of us will kind of just try and guide everyone together, just to kind of say whether if a stock is broken or whether they're going to go long or whether they're going to go short. So that's why I was a little bit surprised that I kind of got these questions, but it does kind of make sense because every once in a while we do get these kind of black swans where no one's really paying attention to the stock and the stock ends up ripping. So I'm just going to show you my kind of hard and fast rules for avoiding and when I think you can still look at a stock. So in short, it's basically when there are no lines left to long. And this is kind of something that, I have even struggled with in my own trading. But I'm going to kind of give some examples so you can kind of understand. A broken intraday chart with a terrible daily chart, that's just some clues that I'm looking for. These are just basically clues. A previous runner from the past that keeps making new lows on the daily and that keeps making new lows on the intraday as well and most likely not going to be the hot chick. So in the morning what I have found is that out of kind of the 4 or 5 stocks that we're kind of looking at in the morning, or maybe we even get 2 or 3, there's going to be one that there's a lot of volume and that everyone's paying attention to, and that one is the one that we refer to the hot chick or as the hot chick. But there's also going to be another one where we kind of see the stock gap up and it's not getting as much volume and it's not getting as much attention. And those ones are more so the side chicks, and those ones are more so the ones that I'm looking to avoid. There can be also day one side chicks too, where it's kind of in where I talk about where I like to avoid them because they're not getting as much volume as the main stocks. And that's just pretty much it. I just like to be long the main ones. I think it's really important just to be kind of long and focused on the main ones and let the other ones kind of do their thing. So in a bit more detail, I know I've said this before, but I wanted to just state it again. It's basically when there's no support lines left, where there's no lines possibly left for me to long. Decreasing volume, the tape barely moving. It was funny today, we actually got a stock opened up this morning, and it's actually an example in this video. And someone said, "Did the stock get halted? Is there an issue with the stock? Did the stock get halted? What kind of happened here?" And Bao kind of quietly commented and said, "Yeah, no one's buying it. There's no volume." And those are basically the stocks that I'm always looking to avoid as a long trader. So it's basically buyers are trapped, sellers are in control, they're usually far below VWAP, and you can use VWAP as a guide for you to kind of gauge how far the stock is down. So basically, if a stock is under VWAP by a lot and it's fading, it's making new lows, it's almost always going to be an avoid for me. And they usually look like this. This is basically the type of pattern that I'm looking to avoid 100% of the time. And I think it's really important to kind of show this type of diagram. I know it's just a drawing. We have some examples later, but these types of stocks every day are ones that I will let short sellers short, and I'll just pay attention to the hot chicks on the day. These ones are never going to be along for me at all. And basically what happens here is we kind of get this gap up pre-market, or this like kind of little pump up pre-market, And then for the rest of the day, we get this fade. And those are the ones that I'm looking to avoid, pretty much 100% of the time. And these are some problems that I've been noticing in my DMs that I also wanted to kind of address, because there's a lot of FOMO when you're a long trader, because you're going to have chat room pumps all over the place, and you're going to see the chat room pumps and think, oh my God, I missed an opportunity. And then you kind of get into the revenge trading, and then you kind of get into almost like a toxic mindset. And it's happened to me before when I first started. So I just want to kind of talk about, some of those things. So a lot of things that I've been noticing in my DMs are that there are a lot of newer traders I find are comfortable with these type of stocks because they're moving a lot slower. And because they're moving so slow, you kind of get attracted to them because you're like, you know what, I'm a beginner. I'm going to get to the hot chicks later. I'm going to understand how the hot chicks work later. And instead of that, I'm just going to look for a slow one. Like my goal on the day is a 10-cent scalp anyway. So I might as well just look for a slower moving stock that I think has potential to give me a 10-20 cent scalp, and that's fine for me on the day. And the reason that that doesn't work as well is because no one else is really buying it, and there's a lot of sellers in control. And if your goal is to be a long trader, you always want to be longing when there is a lot of demand for the stock and a lot of volume. And you can long off a particular line or wherever. There's tons of strategies and plans that we talk about every day. But basically, yeah, this is something that I've been finding, and it's completely normal and natural where you just want to long something that's a little bit slower because you feel that, yeah, maybe I can get a 10-20 cent scalp out of it, and that's all I'm looking for on the day anyway. So, I'm just going to try and long the slower one. And my kind of solution for it would be to put yourself in that kind of, maybe it's a position that's a little bit uncomfortable. I know when I started longing, it was really uncomfortable for me trying to long the hot chick. But I think that once you start kind of getting used to them and sizing down and just focusing on the process every day, that's probably the sweet spot for you. Because there's been tons of people that have messaged me and they're just kind of longing a fading stock, and they're like, man, I just tried to get the bottom, it's a lot slower, that's what made me feel like so much more comfortable, bro, like, do you have anything? And I just basically said, yeah, you should try and focus on longing the hot chick. Like even Bao has started longing. Like today he was long a ticker all day, and that's pretty insane, considering he's like a NASDAQ short seller. And he wasn't going and looking to long the stocks that he was usually shorting. He was longing stocks that were the hot chick. And I think that that's important. We're trying to long the hot chicks, and we're going to let the other side chicks be for the short sellers. So be it. There may be a side chick that pops, but it's better for a short play. And I think if you're a long trader, you want to be longing long plays and leave the short plays to the shorts instead of trying to chase these kind of hot or side chicks around. So this is example one. This is one from last week that I wanted to kind of show. That was a big avoid for me right at the, like, I wasn't even following this from 9:30 on, because for me, this type of stock is just a kind of almost like a natural avoid for me now, because what we see here is we get this kind of morning pump. Forgive me the time zone. I'm actually 1 hour ahead of the market, so the market opens for me at 10:30. It's pretty awesome. But for types of patterns like this, this is my holy grail avoid. I never go along these types of stocks because there's just so much resistance that has been made, and there's just lower lows that are being consistently made, and the stock has just been kind of fading all day. There's no lines for me to even really long. I mean, I guess you kind of have like 1.3 is your last kind of area, and like this kind of area, but it opens up so low, and when it's opening up at like pretty much its lows pre-market, that's just something that I want to avoid. It's kind of a little bit illiquid. It's trading a little bit thicker, and it's not something that I want to really get into. I also want to make note, I'm going to do this for all these kind of stocks in this video, the daily chart as well, because I think it's really important to kind of show off the daily chart and a little bit of the bigger picture. So the bigger picture for this one is that we had 2 nice days of kind of a gap up, and we had a bounce day here. And now the kind of volume has petered out, and all we have really now are just people who have bought in this area and we're holding and hoping for kind of maybe a $5 move or a $6 move, types of people who buy these stocks and try and hold them for a while. So by the time this kind of area comes around, I was also using the daily chart as kind of a clue, saying to myself, okay, we have a stock that is using, that is this type of pattern that's fading, that's really not the hot chick of the day. Probably not something that I want to be longing. And I guess it was correct in the end. I don't know. I took it off my screen early. I know Tom was nailing it short. I know Bao was looking to short it as well. It was just something that made sense to me. It just looked very broken, and something that, was more so a short into resistance than it was, a trade like this. So my example two. This is one from today. And this one was something that also made sense not to long. And the reason was today we had VVUS, which was the hot chick, and everyone was trying to get into VVUS. Everyone was trying to chase it, to long it, whatever. The volume and the money were there. But unfortunately for this stock had kind of like a little bit of a liquid pump, and then it just was not doing that much volume and just started kind of dumping. And for me, that wasn't really what I was looking for at all. And then we kind of got this liquid fade, and I guess there was maybe like some people were messaging me and saying like, would you look to long it off of 6? And I said no, not really, because it was just so weak, and it just when it opened up, it was like barely even printing. I mean, the volume here is like 60, let's give or take 60,000. That's just not something that I'm looking for off the open. And we just kind of got this fade, and that was it. And this isn't a ticker that I'm not looking, that I'm looking to be long. There's no lines left. Stock is completely broken. We have another stock on the day that is doing a ton more volume, that's in a nice price range that everyone's looking at. So this is not one that I was looking for. And also, I'm gonna keep including the daily charts. So this one, there's maybe a couple, maybe there were some people long from down here that wanted to sell. Maybe there's people trapped at 12 that are saying, geez, I don't want to sell at 4, but if it gaps up to 6, 7, or 8, I'll sell it. There's all these types of conspiracy theories that people come up with all the time. To me, this type of move is enough for me. I don't really need the daily chart as much, because this type of move, it just tells me that this is a broken stock that is doing no volume down here at all. So why would I want to be longing something that's like really like the trash of the trash, Example 3. This is one from a while ago. I know I've mentioned this in previous videos. I kind of like will save patterns that fit into kind of a specific almost criteria for me. And these ones kind of fit into like the trash fader pattern. And these are ones as a long trader that I know to avoid. And so for this one, I remember this one. This one was in October, I'm pretty sure. And this one was just more so of another type of stock that we got this pump in the morning in pre-market, and then it had kind of picked its direction early. And we kind of got this, this pop into 3 and then immediately an instant dump. So the lines, it's kind of an avoid from the beginning. And the reason is just because of the amount of just downward pressure. I mean, it's just downtrending. It's pretty illiquid all the way down. This didn't have a ton of volume. It opened up with kind of like, decent amount, but this was more so kind of from the almost selling, and it's just not something that I'm looking for at all. I'd rather the stock be uptrending and me kind of trying to get the bounces rather than just a downtrending pig that's kind of illiquid where there is another stock up on the day that I would rather be playing. And I think that's important with stock selection because there were, like, the funny thing is that I've been noticing is that there's been a lot of times that these stocks are a lot harder to borrow than the main chicks. And I think that that's also kind of an interesting pattern that I've kind of been noticing, that stocks like this have been a lot harder to borrow than the other easier to borrow main chicks that have a lot of volume, that are being pumped, that are uptrending pre-market. So I always try and pay attention to that as well. And also on the daily chart, I mean, this one is just, it kind of just got wrecked. I mean, what else is there to say on this one? Like, this one just ended up getting wrecked. We had some type of, I'm not sure, maybe a negative news catalyst or something, but we got a dump from 6 all the way down to this low of 144. And I can just imagine all these people from, 4 to 6, it was a recent dump. Maybe they ended up selling into this type of pop, but maybe when news finally came out, I'm not sure. I'm it's not my job to really try and come up with the reasons why. It's just my job to kind of trade the lines and to trade my process, and that's it. And that's why I've stopped reading kind of the SEC filings. I've stopped kind of trying to come up with reasons why, or a reason why something needs to do something. I've more so just been saying to myself, like, let's put the daily chart aside. Let's put everything aside. The reason, that this stock was not going to go to 8 or 9 or 10 or 11 is simply because it's just a fading stock pre-market, and it's just something that there's not really a support line to go long off of, and it's just not a good setup. So that's the reason. That's how I would look at this one for sure. Example 4, FPay, same type of move. So we get this kind of this pop pre-market. Maybe people are paying attention to it. Maybe people aren't. And again, we just get this liquid kind of this liquid fade downtrend with not a ton of volume. And there's no real line to long this one. I remember this one. I had a couple people message me and said, FPay, we thought it was going to spike to 2.6. We thought it was going to spike to 2.8 because usually the stocks have a spike. But it's like, I think if you want to be a long trader, you should be kind of looking for the support lines. And here we don't really see any support lines or any real areas of support. I mean, every area of support just keeps getting broken and broken and broken. And it's a liquid, not a lot of volume, not a lot of interest on the stock. There were other hot chicks that other people were paying attention to. There were other stocks moving. This one didn't really have a lot of attention, fading. So this one is just going to be an avoid for me on the long side. And this is the daily chart. So, if it fades, people are going to say, oh, well, a lot of people were long here and then they sold. If it had have ended up kept going to 5, people are going to be saying, oh, well, a lot of people were short here and that's why it went to 5 because of the short. So it just honestly comes down to, that's why I try, like, sometimes the daily chart is going to help you. Like, maybe an area like here, you're like, oh, this stock does have a history of, kind of gapping up and fading, But in my opinion, this type of ticker, this type of action is enough for me to kind of count it out and say this isn't something that I'm looking for. Example 5. So this is one that's kind of interesting because we have this area of kind of a little bit of support at 3. We have some resistance up here at, let's say, 2.9. And people are kind of going to be saying to themselves, oh, well, maybe this is going to spike to 3, 3.2, 3.4. But there's not really a great line to friggin' long on, especially when the stock opens up at its lows. Because when the stock opens up at its lows on this type of area of support at 2.8, I'm going to be less likely to trust it. because I know that there's a high chance that we will get some selling and this stock will end up dipping. So I'm going to be definitely less likely to trust this kind of pattern in action. And again, it's just like the other examples. I work really hard to try and find examples that are very similar to one another so you can understand that patterns do repeat and it's not just like, random charts that I'm pulling up. This is something that we see all the time. And it's just this same type of pattern that in the morning pre-market they just get pumped, and it's a little bit of an illiquid pump too. And we end up just getting this kind of crappy fade, and that's just it. So this is a stock that I'm gonna avoid on this day. There were other stocks that were moving. This one didn't have as much attention, so that's just about it. I mean, CANF, this is a repeat offender. This type of stock loves to do this type of action all the time. So, even knowing that, even having that kind of information in my head, like kind of allows me to avoid over here saying like, okay, I'm not going to get pre-market FOMO. I'm not going to fall into that trap. I'm going to wait till the open. I'm going to see how it opens up. I'm going to let this chart form first in order for me to kind of make a decision on where to go long. And also, yeah, when I mean repeat offender by CINF, I mean this stock, it had a reverse split, I'm pretty sure. Yeah, it had a reverse split back here, 1 to 15. And we got a pump and then a dump, and now it's back trading at $3. And you can see that every gap kind of ends up failing, kind of ends up at its lows, kind of ends up. But also, you can't get too convicted because the one time this does go to $4, you're dead, right? So you can kind of use the daily chart as a clue when it starts kind of conforming to the daily chart, but you can't just be saying, oh, well, on, this day the stock ended up fading, so it must be a fader. This day the stock ended up fading, so it must be a fader. Because the one time where you're over convicted, the one time where you don't stop out and you keep holding because you're like, oh no, it can't be, that's the one loss that you're going to take. So always respect risk management. I just include the daily chart because it can give a little bit of clues. But I mean, this is all hindsight, guys. I mean, this could have went to like $6-7 on some random news, some random pump, and everyone who had that kind of idea would have been dead, right? Example 6. This is CODX when it was trading at $3-4. As we all know, it ended up going to the high teens. So it's very important if you are on the short side or if you are, on the long side, to know that these stocks can really get going. It's just this type of pattern pre-market was not something that I was looking to go long on at all. And we get this gap up. And immediately, I mean, what line am I supposed to really long here? I mean, the stock ends up at its lows at the open and ends up just fading for the rest of the day. So it wasn't something that I was looking for at all. You can just kind of see from the pattern that this isn't really a great long ticker. I mean, if every long from 2.5 to 3.5 now is stuck once it goes down to, let's say, 2.4 area. And that's something to kind of be aware of, that when are long traders stuck? Do you want to be longing? Do you want to be betting on a losing team, or do you want to be betting on a winning team? And in this particular case, longs are not winning. They're losing, unfortunately. So I mean, that's just it. We're gonna have tickers on the short side, and we're gonna have tickers on the long side. We're going to have opportunities for both sides, but it's knowing when to avoid the ticker that's not really best suited for your side. I think there's a lot of money to be made in not going long, because you're basically saving money by not trying to long a ticker like this. And yeah, I mean, that's just about it. We can also see from this daily chart, yeah, we do, see some gap and fades. That's something that's really good to know. But, you might say to yourself, oh, well, this is gap and faded 3 times, so I can just go short, and then it might go to 3.5. Who knows, right? I'm just simply saying the types of patterns that I avoid. Example 7, another avoid chart. This one also more of a repeat offender like CANF and the rest of them, just pure, pump and dumps for the most part, pretty much. And we see again this pump and right off the gate, right in the first, 20 minutes, we get this, fade. And again, I don't love when it opens up at its lows in this type of scenario. I mean, yeah, we get a pop to like $2, but I don't really love it. And then we get the fade all the way down, and that's really about it. There's no lines really left to go long, in my opinion. That's just about it. Yeah, and here's the daily chart from that day. So again, I mean, you're gonna have people who are like, oh, if it ends up running, you're gonna have people that say, oh, here was, all these shorts down here were trapped, and that's what made it run. And when you have the stock fade, you're gonna say all these longs down here and all these longs from down here, they're all bagged. So it just all comes down to just kind of hindsight stuff. I just wanted to add these types of daily charts just for kind of educational purposes to try and talk about it. Here we go, example 8, same ticker again. It did the same type of, so this was on 214 and this was on 222, yeah. So this was on February 4th and this one was on Valentine's Day, February 14th. And again, we get this pump and this illiquid kind of setup and kind of opens near its lows, and off we go. The fade has kind of continued. And that's just pretty much it for these types of stocks. I mean, these aren't stocks that I'm loving. These aren't stocks that I'm looking for. These are just pure, just kind of avoids for me. And again, here's the daily chart. This was the previous daily chart that I just kind of showed you. I guess a couple more days passed and we got another gapper, another fresh PR. But yeah, I mean, that's just really pretty much it. So that's the end of my kind of examples part of the video. For takeaways, not downtrending PM. Pre-market, no support left. Nothing's 100%, but the sooner that you can recognize these types of patterns, the more you can focus on the best long tickers. And stock selection is important in the morning. And when you can develop your process to select the best stocks to put you in the best position for your type of bias or your type of strategy or your type of pattern, I think that's really, really important. So, yeah, that brings me to the end of the video. I'm always here. I'm always in chat, like literally all the time. If we haven't done a call, please set one up because I love to get to know new people and new members. And I've been getting to know actually a lot of people that aren't just like members and aren't just like random people who I just talk to for like 10 minutes. I get to know people that I literally consider like my friends now, and they ask me advice all the time. And I literally consider like people that I talk to every day, like literally my friends in here and family, because we talk so much, and it's just everyone is always learning new things. And I mean, you have someone like Bao who has been a short seller for so long, and he might have gone long once in a while, but this is the most I've ever seen Bao go long in the last 3-4 months. So I mean, everyone's always working on new things. Who knows? Maybe I'll get into short selling. It just all comes down to your own personality and whatever. But we're always learning and we're always getting better. So yeah, thank you guys for watching this video, and I hope this helped you out.